All right, testing, testing. I guess we're rolling. All right, good. Hey guys, ¿qué pasó? And welcome back. It's Hala Pablo. Let's look at some Bitcoin. What do we always look at? Bitcoin. Bitcoin's all the buzz right now. ETF got approved. Big surprise there, right? And also, I'm being sarcastic. Not a very big surprise also with what happened. So, like we talked about, we had that hype pump, and then the sell-off, keeping us where we presently are, atop macro trend resistance, with a very, very pronounced. See this pattern here with this large UTAD, this red UTAD. You see it here on the other tops. I call this the horns of the devil, and it is indicative of a top, of a macro top. And so we see that over and over again. We see it at the top of these buying climaxes as well as the counter trends. And then up here in the buying climaxes of 2021, we've had horns of the devil peaking the tops of them as well. The second horn is usually the most pronounced. That's the UTAD. In Wyckoff, that would be the upthrust after distribution UTAD, and that's in essence what they are bull traps. They're gigantic bull traps. They're FOMO rallies at the end of a 5-wave, of an Elliott impulse wave, and then it retraces right back down to the macro trend support that it had flipped. Actually, it didn't flip it, so it's still resistance. They want you to think they flipped it to support, but it comes back down, touches macro trend resistance, and it's there where the ABC corrections begin. And so, that said, we see that here, horns of the devil, and we see horns of the devil forming here. This is a very, very large sell candle, supply candle, and it hit. In fact, I thought it would go a little higher. I thought we'd peak out at maybe 50 or 52 and 52,000, and we very well may. This may not be over yet. There's a big war being raged right here atop macro trend resistance. Currently we sit at 46.6, and we haven't gone down yet, but we haven't broken that supply order block hovering this which would this macro liquidity void right here, which caps out at 48.4, about 48.4. I could give it all the way up to 52,000. I don't see it. I don't see us going any higher than this. We may form another horn. We may try to breach that 52,000 liquidity void area, mitigate it there. Although 48,000 to me mitigates this liquidity void, just like this liquidity void here was mitigated back in 2019. So I wanted to just spend a little time and kind of talk a little bit more about some of the stuff we've been discussing now that the ETFs are out, and Bitcoin showed us its hand now, so we can kind of anticipate what awaits further down the road. And if you've been following my videos, you should be pretty confident in where we are right now and what's in store. Indeed, all of the technical analysis, whether it be Wyckoff or Elliott Wave or VSA or Fibonacci or Wolfe Wave, all of it points to a counter trend that we are currently peaking out at. See, I drew the last bear and bull cycle, dual cycle out here. Remember, we've been doing this popped up. Let me get this out of here. Get my brush here from 2017, the buying climax and the counter trend of 2019. All of this to me constitutes one full cycle. Some traders count just like the bull cycle and then the bear market, and then they count this as a second bull cycle. I count this as a bear counter trend. And all of this until we get this reversal that happens here, this bull reversal where demand comes in, where after the counter trend bottoms out, mitigates the low from the prior selling climax, and then comes back up through macro trend resistance. Here, I consider this the real bull market because we're here. Remember we talked about we're going into another star system from here. This is its own galaxy. This is its own cluster, star cluster, planetary systems, and all that make up the Elliott waves, that comprise the Wyckoff schematics, that make up entire cycles, tops, bottoms, accumulations, reaccumulations, distributions, redistributions, and all that stuff. That is all part of one separate system. And then we break the macro trend confine, and then the price goes intergalactic like we talked about, and then it starts to form. It peaks out at a whole new buying climax. This one we saw in 2021 where it began here. This I know you see like two different peaks here, and you're tempted to call this here like a bear market. It's not. This was just a massive pullback. It's also in here, if I were to blow this up, it's just less pronounced because there was less money in Bitcoin and less impact from institutional order flow. Now we have a lot of institutions. Wall Street's woken up to it. A lot of pension, hedge fund operators and all those guys now are in the game. So we're going to see much more pronounced Elliott waves, pullbacks. We're going to see extensions on 3 waves. We're going to see extensions on the 5 waves, on the Elliott impulse waves. We didn't see that so much back here. So that's what this pronouncement is. But this is all part of the same top here. This is a top just like this was a top. And this is where we drew the new macro trend line starting at the top of this buying climax. And we bring it all the way down. And we see the same thing playing out here. Now, what I want to talk about on this one, I know we talked about the Elliott wave on the last one. Let's talk more like VSA. Let's look at volume. I drew this out here, and I wanted to show you further technical details that I look at when I'm looking at potential counter trend tops. And so, which I contend we are presently in. Now, if you notice, at each buying climax, we come down, we have a cool off, we have a retracement or like a markdown. This is a proper bull market, bear cycle, which culminates in the selling climax. And there we have a supply volume protruding. We have the bottom, which I call bottom supply. I circled it here for the selling climax of 2018. The selling climax of 2022, this was the absolute bottom here. This was a 16.5. We had the same kind of bottom supply volume spike. And then here we come back up into a macro rising wedge. We had the rising wedge here. Remember, we counted this out. We had the 1 wave, 2 wave, 3 wave, 4 wave, and then the 5 wave topped out again at the macro trend resistance in the 0.5 Fibonacci. Remember, we drew that out, the 0.5 Fibonacci. If you didn't, check out my last video because I drew out all the details from these fractal triangles. Well, this constitutes the macro rising wedge, and this one was a broadening ascending wedge just like the one we're currently in, and it topped out. And this actually went up, I think 300% or something like that from absolute bottom. No, it wasn't 300%. It was 355%. So we rose 355%. People are thinking they're going to moon. It was going all the way up, and it didn't surpass the previous buying climax of 19.8 or whatever it was. Let's just say 20,000. It was a counter trend, and it sold off. And so we see the price beginning to come up within the after we hit the selling climax. Remember, we go into the rising wedge, and the rising wedge on the macro with the price, and then we top out at the top there, and that's the counter trend. And then we come back down, ultimately to remitigate or come very close to remitigating the prior selling climax. And that's why you hear traders talking about Bitcoin going back to 20,000, Bitcoin going back to 15,000, or even lower. And some people are like, that's just preposterous. How can that be? Well, because of the schematics. It's a pattern that occurs over and over and over again in these macro cycles. After the counter trend markdown, we go usually, not always, back down to where it was before. Sometimes we just come back to the 0.5 fib line, which would, in our case, put that around $25,000. Or we can come all the way back down and do a deep spring, which would put us at 15 and below. And so certainly we see the volume telling us that there is a sell-off here. We saw the bottom supply rising, the two prominent supply spikes here are not demand, they're supply. Even though the price was going up, the price was heading up 355%, we still had supply predominating over demand, and that was a big tip-off that we were fixing to dump at the macro trend resistance, and that's exactly what it did. You see how it rode this a little bit? The price action rode it, kind of rode right beneath macro trend resistance, and then finally it just had that sell-off where it remitigated the selling climax or came pretty darn close to. This big supply spike, that was the counter trend top supply, and I anticipate seeing that pretty soon. We're already getting predominant supply again reemerging in the vertical bar volume, which precedes all the demand basically before it. We're going to get to this pretty soon. I'm going to talk about this demand pattern in the vertical bar volume. But here we see once it topped off at the counter trend and the price starts going back down towards the remitigation of the low of the spring, and then where it's going to start the full reversal. We don't see any more of these gargantuan supply spikes. It's because they've already sold off, and now the campaign for the market makers is reabsorption, and that's what accumulation is, and that's why we see both volume in supply and demand decreasing in this stage here, culminating in the deep spring, and where we see now the dominant demand bar, which takes us up, retests macro trend resistance, flips it, and now we're going intergalactic. Now let's go. That was back in 2017 to 2019 cycles. Let's go to today's current cycle, our present galaxy where we find ourselves. All right, towards the tail end of the galaxy. All right, so we had the buying climax in 2021. All things pretty common here. Now we want to look at supply. We had this supply sell off the bars. Here's the absolute bottom supply right here from the selling climax in 2022. And then we started the macro rising wedge with the same count as we had in the rising wedge of 2018, 2019. We have the 1, 2, 3, 4, and then the 5 wave extended up to the macro trend resistance, the new macro trend resistance. And here, I want to show you something with the demand. I remember I said we're going to talk about volume spread analysis now. We've already looked at the Wyckoff, we've already looked at the Elliott Wave, and we looked at the fractals. Now we're going to look at the volume spread, or the VSA. And see, what is the VSA showing us? The VSA is showing us that as the price, wouldn't you say that the price is ascending within this wedge? It's a wedge, it's a rising wedge, it's broadening, meaning the waves are expanding just like they expanded here, which is a bearish signal ultimately. But we see demand bars protruding here, but each one is getting less and less. So they're dominating, but they're also decreasing. Got it? So which is kind of weird because the price action is going up. So it's a form of divergence. So we have demand going down in volume, but the price action going up. So that's clear divergence. And now we want to see, where are these demand spikes registering in the pattern? And they are registering, or they're emerging every time the price action hits now this is the micro trend support of this ascending wedge. And that means that the market makers all along have been, and this goes all the way back to January of last year, January of 23, have been on each pullback, have been buying on the pullbacks, but the volume of purchase has been decreasing systematically as the waves grow. So, and then we see here, finally it reached the top, and now we have dominant supply again, just like we saw here, dominant supply. So, and actually the supply started building around August of last year. So we see like these, I don't know if you could see this, where you could see the supply bars beginning to emerge. And so while the The demand is decreasing. We have divergence, even though the price action is going up. The supply in the latter half of this wedge around the 4 wave here has suddenly emerged and has now overtaken demand. And now with the ETF rollout, remember we talked about the hype of that. We're seeing just a major predominance of supply, where we should see, you would think, if you follow what the media says and what all the hype and all the FOMO stuff that's out there to get retail to invest, you would expect just a massive demand volume bars to begin to register here. But we're not seeing that. We're seeing the opposite. We're seeing supply coming in. All of this is the same song, the same old song and dance that we see over and over and over again with these Wyckoff cycles. When it reaches a counter trend after a buying climax and a full buying climax and a full selling climax with a macro rising wedge, we're seeing along the macro trend resistance, devil's horns of the devil, like we talked about in the beginning of this video, beginning to emerge with predominant supply volume. All of this is indicative of a potential sell-off that needs to happen. What this is up here, this is a liquidity grab, guys. This is market makers selling off at the macro trend resistance with getting retail to hold the bags. They're going to sell off in order to rebuy down here at the mitigation point of the spring in preparation for the bull reversals. So the counter trend top of this year is nothing more than a grand scale liquidity grab. And I'm going to say it. I keep telling people, I tell people in my group over and over again, don't be the liquidity provider for these guys, okay? Do not be the liquidity provider for the hedge fund guys. Don't be the liquidity provider for the endowment fund people. Don't be the liquidity provider for the market makers, for the composite operators, for the whales. Don't do it. Just be patient and read the signs of the times. Like you look up in the sky. I mean, it's in the Bible, right? Jesus said, you know it's going to rain. You look and see, the sky's red at night, and you know it's going to be a good day. The next day is going to be a good day. It's the same thing with VSA, with volume spread analysis. Look at the signs of the times. Look at the omens in the volume in conjunction with the price action, and you will be safe. And you learned that in my group. This is what I teach. This is all I do. I'm a full-time trader, full-time investor. I've had enough success where I can do this full-time, and I've done this for over 8 years now. And I'll show you how to stay safe in these markets. If this is information that is beneficial to you, if you get something out of these videos, I'd really appreciate a like, a subscription is awesome, because that gets it on the algorithm so more traders can learn this stuff, learn how to trade properly, learn how to analyze solid technical analysis in these videos. And even better yet, I have a trading group through Patreon. It's a Discord trading group, and I keep it extremely affordable because I don't need the money. It's only $20 a month, and I teach you how to fish. Instead of feeding you signals, I teach you how to fish. Now, you're welcome to do what I do, and I show everyone what I'm doing, and you're welcome to do it at your own discretion, at your own risk. But better yet, wouldn't it be better if you learn how to do this yourself, and you can go get fish, you can go hunt, you can go get food anytime you want, instead of going and having to rely on someone to spoon feed you? So anyway, that's what I endeavor to do and to teach. And so before we sign off on this, one last thing, I'm going to check the macro Elliott wave and see what this shows us. See, and even the Elliott wave is showing down from here on the macro. See the one, okay, so we got the 1, the 2, the 3, the 4, okay, and then the 5. So the 5 is extended. It's still not longer than the 3, or it's about the same, but then we have the ABC commencing here. And so 1 puts the A at the 0.382 fib, which is 39, what is that, 39,000, and then the 0.5 Fibonacci, 37. So even the Elliott waves are showing that we are fixing to retrace from this macro resistance. So anyway, process all of this, and look into it and let me know what you think. Leave a comment, leave a message, and I'll be glad to get back with you when I can. I hope you like this video. I'm going to go. Oh my gosh, it's been 20 freaking minutes. Time flies when you're analyzing, don't it? All right, guys, I'll talk to you later. Oh yeah, and also notice here on the top of this macro wedge. Okay, so I'm going to kill some more time here. Low demand. So you would think that if you look, the demand is coming in at the macro support line, but on the micro support line, but on the micro resistance where the price action is hitting, we have low volume. See, that's in between these spikes. We have these dips within the volume. So there is no enthusiasm by smart money to pump the price above the microtrend resistance as they ascended this wedge. Only buy in decreasing amounts at the support zones, because their grand scale, the grand scheme of things, is to sell up here, dump their bags, let retail hold it, bring it back down, retrace into the structure with their eye on the inevitable mitigation point down here to rebuy Bitcoin cheap and get in deep and sell it once they get up to, I don't know what, I haven't done the Fibonacci's on the next macro, $100,000, $110,000 Bitcoin or whatever it is. They're going to be down. They're going to have Bitcoin that they've bought in the low 20s that they're going to hold. Okay. All right, guys. Talk to you later. Like, subscribe, and have a good one. Be safe. Bye-bye. Adios.